Welcome back to Yahoo Finance Live, everyone. Taking a look at the major averages here in the U.S. We've kicked off the day higher across the board for the Dow, the S&P 500, and the NASDAQ leading the pack. The tech-heavy average up by about 1.3%. For more on today's tape and what's taking place early in the activity, let's get on over to Yahoo Finance's Jared Blikre at the Wi-Fi Interactive. Jared.
Yeah, it's nice to see some green to start 2023 here, but we still got to think about 2022, at least in one respect, and that is Santa Claus. Santa Claus rally still going on. You're going to hear that for one more day, and I promise I'll be quiet about it for almost short of 1 year. Here's the Dow over the last 6 trading days, extends into tomorrow, but it's already up 1%. You can see, for the most part, it's been sideways trading throughout this, 1.4% for the S&P 500, and for the NASDAQ, 1.25%. As they say, so goes January. As goes January, so goes the year, and we'll get into some stats in a minute. But I want to check out the sector action for today. As Brad went over, communication services in the lead, followed by tech, real estate, financials, all of those outperforming. And the NASDAQ, you're going to see a lot of green here. It looks nice. And we can see Amazon up 3%. Tesla, kind of the outlier here. That's down about 6-7%. But looking at some of the other major movers, Alphabet up 3%. And you got to take a look at some of these Chinese stocks because these have either been leading or lagging almost on a daily basis, kind of like the energy market. We can see Baba up 6% here, Pinduoduo up 7%, JD up 5%. And then just checking in on the EV market, we covered Tesla, but going to see NIO up about 6%. So is Li Auto, Xpeng up 8%. But of course, those are some Chinese stories there. Want to take a look at the bond market, and we are seeing a pretty big drop. Or this is the S&P 500. Let me just go quickly to the 10-year T-note yield. Pretty big drop, 14 basis points, and you can see we are back in the range from still late December right there. But we'll keep an eye on that. Anytime the bond market moves, and that's favoring growth stocks right now, we want to keep that in mind. U.S. dollar having a pretty big up candle here. Not too worried about that weighing on equity markets unless it gets above 105. We start seeing the Dixie above 105. That's going to show a declining euro. That could mean some trouble for equities. And now I just want to get into a seasonal play here. This is JP Morgan's outlook for the year. And in terms of recession risk, they're seeing 4 main scenarios. I was surprised to see, and I'm just going to summarize this, how dovish it is. They're expecting a 20% chance of a recession early in 2023 is avoided, so no recession, 20% chance, but growth risks remain, and also a 20% chance of a Goldilocks scenario where inflation falls to 2% without a recession. So I guess they're joining Goldman Sachs and thinking maybe it's not going to be that bad this year. We'll have to see what comes of it.
We wouldn't mind that. Jared Blikre, thanks so much. Appreciate it.